All right, as the first trading day of the year gets underway, let's bring in Steve Sosnick, Interactive Brokers Chief Strategist. We won't ask you about K-Beauty, but I do think it speaks to the fact that the rally was global, and it wasn't just about AI. And I wonder how that sets us up for this year.
Well, I think anytime well, first of all, Happy New Year.
Happy New Year.
But anytime we get a broadening of a rally, that's generally a good thing. And internationally, that really woke people up. And we can debate the causes, and that probably we'd run out of time debating the causes. But people began to look internationally. I think earlier this year, I got a lot of calls from a lot of intelligent people saying, I'm looking abroad. And it's a big, wide world out there. And we have a global customer base. We have seen a lot of people really moving their money, I'm not going to say out of the U.S., but at least looking for opportunities beyond the usual suspects.
And that continues? People are still looking to do that?
They clearly are. I mean, we see the Asian markets. You know, they got off to a great start this morning, basically this year. But I would say it's ebbed a bit. We saw a lot of that more first and second quarter into the third quarter. I think it's kind of a little bit more back to the knitting, but there's definitely people have added, the international exposure to their portfolios in a pretty major way this year.
Remember when tariffs were supposed to kill all these emerging markets and Asian economies? I mean, that idea completely backfired.
Yeah, I mean, because you know what? It's very difficult to bet against the ingenuity of management teams. Ultimately, companies figure out ways to do this stuff, and international companies are no less intelligent than domestic companies, and they've figured out their ways around it. Plus, I do think there was a real desire for people to get exposure away from the dollar and into other currencies, taking on the currency exposure instead of avoiding it.
When it comes to 2026, what are some of sort of the key things you'll be watching, moments and/or events perhaps this year that are important?
The few things that I think really need to be discussed in a big way. Number one is the propensity of markets to kind of do lousy in midterm election years. We've had two bear markets in 10 years. They're both in midterm election years, 18 and 22. And 18 began with Volmageddon. I don't know that we're at that sort of setup now, but we're definitely, it's something I'm keeping an eye on. Fed chairs tend to get stern tests when they start their new terms, and we can go back over the history of it. Pretty much only Yellen escaped a real stern test in her first few months.
A test being what?
Just okay. Powell took office literally in term for that 2018 Volmageddon. Yellen had an okay time, sort of 2014, 2015. Before that, Bernanke took office just in time for the global financial crisis, and Alan Greenspan, before him, took office August '87, and we all know what happened in October. So I'm not going to say that all these things transpire, but one certainty we have is we're getting a new Fed chair. How it all transpires is a big uncertainty. And I think also, I know this has been discussed before, but the reliance on a cadre of private, hopefully to become public, AI companies who have to scale up immensely to meet the commitments that they have. I don't mean to pick on OpenAI, but how does a company with call it $20 billion in revenue meet $1 trillion of commitments over the coming 5 years?
Yeah.
How do you do that? And if you don't do that, I know everybody's today is back to Mag 7 day, at least so far, but if they don't do that, I think that upends a lot of the earnings growth that's priced into the market because we are so top heavy.
So you have a good sense of retail at Interactive Brokers. How did they perform in 2025, and what level of exposure do they have to risk assets in 26?
For the most part, they did pretty well. I would say the big moment for retail really came in April, because what we saw was, as institutions were getting out, our individual customers were buying the dip, and our customers have been assiduously buying every dip. And to be fair, it's a strategy that has worked really well for them. Now, we all know that no strategy works perfectly all the time. And I do get concerned that there will be a day and it doesn't work, and that could be problematic. But for the most part, it's worked for them. We did see a lot of real speculation earlier in the year. I didn't see that. I saw a little bit last week, but I think that was just because it was a light volume week. But in terms of like weird social media buy and chase type of stories, we did see that, and they faded away from that. They got heavily into silver in the last few weeks. SLV, which I don't recall ever seeing on our top 25 most active list, was number 3
Really?
Well,
Is that problematic to you?
it is problematic in the sense that it's not problematic in the sense that our customers are very much drawn to volume and volatility. And so if there is a story, if there's something moving, they trade it. Our most active customers are very aggressive that way. I don't love the fact that silver's on a parabolic move higher. And you know, you mentioned the Bitcoin chart over the year. If you do Bitcoin versus gold over a 2-year period, they actually have performed almost identically. It's actually kind of it's uncanny. Silver, on the other hand, went parabolic in the fourth quarter, and parabolic moves are both unstable, and it means, you know, they have a way of unraveling very quickly. So to the extent that they're trading them and keeping their risk managed, which so far I think they have been, I'm fine with that. If people start to pile into the top of a parabola, I get nervous.